Hi there. So it's come to my attention that it might be helpful for me to go a little bit more in depth on current market conditions, what is currently happening, what we foresee happening, and so forth. However, I really think I want to talk to you a bit about what is going on in terms of pricing it right. In my last short email to you guys, the video I recorded last time, I was talking about are we experiencing a calm in the market, or are we experiencing a slowdown? What's going on? And I talked about pricing it correctly, pricing the property it correctly. If a seller wants to maximize their experience and have the best opportunity to sell for the highest net proceeds, that they should price their property correctly, and also they should present their property correctly, right? So I wanted to take a minute and talk to you about what does it mean in this market to price your property correctly, and what is the danger, what is the juxtaposition, as it were, between properties that are priced correctly and properties that are priced incorrectly. So I'm going to share my screen with you and give you a little bit of a tutorial on what's going on in our market. And these are the kinds of things that I share with our agents in our Tuesday meetings. And we go over this kind of content on a weekly basis in order to stay on top of the market and to further help our buyers and sellers. So I'm going to share my screen with you, and then we will go into this little bit of a market update. And then I'll talk to you just a little bit about what the heck's going on in the market right now, right? So this is all pertaining to July 2021. Okay, so this is the month that we just finished a couple of weeks ago, and so that is the time frame that we're looking at the data for some of this information. So one of the things I wanted to talk to you about is actually showing activity. Okay, so we track showing activity through various sources, and one of them is the Showing Time service, which the Showing Time service is a third-party provider of showing appointments and so forth, appointment setting for people that want to get into listings, and then the feedback mechanism for listing agents and so forth. But there's a lot of data tracking that goes with showing appointments. So this right here is a trend line for Metro Denver. Okay, and it's showing the weekly averages from 2019, 2020, and 2021. And one of the things that I wanted to point out, and I'm using my little handy pointer here, is I wanted to point out basically this section right here, okay, between my two little red lines, right? And so what I want to show you is that, so this started about, so it starts at about May, let's call this, maybe somewhere toward June, right? And then, here is, maybe where August might fall, so to speak, or maybe where we are. If you look at this trend line, one of the things that you notice, because there was a lot of people that were saying, hey, in June, July, the showings fell off, right? There was a drop in showings, there was a drop in market activity. Oh my goodness, there's a coming crisis, and here's the bubble burst, and so forth and so on. But take a look at the trend lines year over year for the past 3 years, and what you'll see here. And so the gold line is 2021. Now it is somewhat down. Okay, you can see that showings, the deep blue, which was I'm looking at, that's 2020. That was up about 50%. Over the time period. But if you take a look at this little line here, and you see this activity, see that trough, see that dip. This is very similar to previous years' dips, and then the corresponding fade that comes along that dip. There's a dip, it increases back up to a point, and then there's the fade that comes along, and then as you see, it kind of settles out, and then we actually go into what is the third quarter. Historically, for the past many years, Evergreen has the Denver foothills, Denver metro area, but specifically Denver foothills. We have a really hot first quarter. Then we see a bit of a lull. Typically, comes along as soon as school is out. June, July, there's always a lull. I remember when this started happening 5, 6, 8 years ago, we were getting, we were afraid, because all of a sudden maybe the wheels are coming off and nothing else is going to happen for the rest of the year. Then what happens is third quarter comes along, and you see third quarter has a recovery, right? So in our market, activity is strongest in first quarter. The second strongest quarter of the year is the third quarter. then the second quarter, and then you can see that showing activity typically recedes over the fourth quarter period as the year ends. And so what I'm telling you here is that the activity that we're seeing right now from a historical perspective is mimicking the pattern of previous year's markets. Okay, so there's nothing to see here in terms of new information. This is something new. This is something different. This is something that's never happened before. And so we see the trend lines moving in a predictable way as they have for the past few years. And if the data went back further than 2019, it would show this similar pattern of activity. So I wanted to make that clear to you guys. Another thing that I want to talk about a little bit is basically just Evergreen and Conifer statistics, okay? And the reason why I point to Evergreen and Conifer and not, also include Kittredge or Indian Hills or Pine or Bailey or Morrison, the foothills of Morrison or the foothills of Golden and so forth, is because it's arbitrary. but Evergreen and Conifer are large pockets of information for our foothills market. And I think it gives us a good representation of what we might see and what's going on in the market. So this is month of July for Evergreen and Conifer. And what you see here is, you see in the burnt orange is Evergreen. All right. And so in 2019, for the month of July, there were 713 new listings. In the month of July in 2020, that dropped to 667 from 713 to 667. And then this year, the number of new listings went up to 749, basically 750, which was a 12% increase year over year of new listings. So you see there that over the last 2 years in July in Evergreen this year, we had more listings than we've had the previous 2 years. If you take a look at Conifer, however, you see that in 2019, they had 251 listings, and then they dropped 5% to 238 listings. Now they're back up to 244 listings. But you can tell that although there's no significant change in that line, you can see that they were slightly up 2.5% year over year in the month of July for new listings, whereas in the Evergreen market, we had a 12% increase year over year. So there's new listings coming to the market. There are more new listings coming to the market this year than last year. And in Evergreen, there are more new listings coming to the market this year than either of the 2 previous years. In Conifer, not exactly. Okay. Let's take a look at the number of closed listings. Okay, this is a dramatic increase in Evergreen, as you can see. Evergreen is experiencing it's still a very hot market. And if, and there are people out there that are saying, well, the wheels are coming off, the bubble's about to burst and so forth and so on. And the economics simply don't support it. But take a look at this. In July, the number of listings that closed in Evergreen was 734. Okay, that's up from 572, which was up from 536. Tremendous increase in number of closings. That's up 28%. 28% increase in Evergreen and closed properties in the month of July year over year. If you look in Conifer, that number went from 201 to 232 back down to 229. So again, in 2020 and in 2021 for Conifer 80433, you don't really have a significant change. There's a bit fewer homes sold, 3 homes less sold in the month of July, but Evergreen, as you can see, is a significant trajectory, 28% up year over year. Let's take a look at dollar volume. Okay, this is the dollar volume of the properties sold year over year and how they compare during the month of July. So you see in Evergreen in 2019, July of 2019, 365 million in dollar volume. In July of 2020, 422 million in dollar volume, and then a whopping 60% increase to 679, almost $680 million of dollar volume closed in the month of July in Evergreen, Colorado. And again, up 60%. Tremendous trajectory there. As you can see, Evergreen is no longer a secret. The secret is out. We're no longer hidden. People know we're here, and they're coming to buy your house, right? So that's what's going on in Evergreen. If you take a look at Conifer, again, significant growth in Conifer from 115 million in 2019 to 139 million in 2020, up to 171 million in 2021. So that is a 20% increase there, which is a significant increase in any estimation. However, it pales in comparison to the 60% increase in dollar volume in Evergreen, right? Interesting stuff. It's a bit more of a deep dive than what I've given you in the past in terms of the videos, but I want to bring this information to you so that you can be informed as far as what's going on in our market. And so, kind of a deep dive for July market trends in Evergreen and Conifer. Now, finally, I want to share with you some information on pricing it right. Okay, and I talked about this in the short video a couple of weeks ago, and this is the key to the market, right? If you are a seller, if you are wanting to have a successful selling experience in this market, pricing, right? They talk about price, condition, and location. Price is the paramount. Price and presentation, I think, condition, presentation, or maybe are interchangeable. But that is what I see as the most important pieces. But in this market, if you want the biggest net proceeds, if you want that winning opportunity that you have, and never, up 60%. Literally, that opportunity that you have to sell into this market and to get that maximize that value and that return on investment, pricing it right is key. Let me demonstrate. Now, this is actually pulled from directly from the MLS. I have not doctored, manipulated, chosen, extrapolated, deleted, refined, nothing. Okay. What I did is I got on the internet two nights ago, plugged in the MLS and plugged in the Evergreen zip code. Now, this is a tiny little chart. Okay. So I'm going to have to kind of talk you through it a little bit. And maybe you have to pull the chair closer or get the phone, closer up to your face or whatever that is. This is a current shot as of 2 nights ago of Evergreen, Colorado. Okay. And so by zip code 80439. Okay. And this is basically the starter area of Evergreen if you're looking at single family detached. Okay. You can find some properties in the 600s in Evergreen right now that are kind of starter type homes, but typically they may bid into the 7s. And so, what I did is I pulled the 700 to 900 segment. So a $200,000 segment in 80439. So that is our parameter. That's the box that we're looking in, 700 to 900,000. And I said, okay, what are the active listings on the market in Evergreen, all of 80439, between 700 and 900,000. Okay. So what you see is there are 4 homes available. This was 2 nights ago. Typically in the market we have right now, properties come to the market on basically Wednesday or Thursday for the weekend. And so when I pulled this information on Monday night, the weekend had passed and some of the new inventory maybe from that previous Thursday and Friday had gone under contract on Saturday, Sunday, Monday. But anyway, if you were in town specifically on Tuesday and you had to find a house and you pulled the listings on Monday night to see how many houses can I go look at tomorrow between the price of 700,000 and 900,000 in 80439, there were 4 choices. Okay. Now, the interesting thing about these 4 choices is you can see some dynamics about them. Okay. One of the dynamics is their average days on market right here is 32 days on market. Keep that number in mind because that is a long time. That's an eternity in our market right now. Okay. And I'll demonstrate that for you in a moment, but they're on the market for 32 days. And on average, they have had price reductions. So the average list price was $858. Sorry for the small print here, but $858 was the average original price, and the average current price of these 4 properties is $838. So you can see that they've had on average about a $20,000 price reduction since originally getting to the market in the first 28 days. You see this one started at $920, it's at $890. This one held firm at $850. This one started at $869, now it's $839. And this one started at $795, and now it's at $775. So each of these properties, average days on the market 32, have all seen price reductions with the exception of 1 listing, and there's only 4 of them to choose from. And so if you had to buy a house on Monday night, Tuesday morning, pick one. This is what you have, right? So what I want to do is I want to present that to you as some information against what we're going to see in terms of properties that have closed in the last 30 days in the same price point. So again, here's the list of 14 properties, or 14 of the properties that have closed in the last 30 days in 80439. Now, the interesting thing about these properties is they had less than 10 days in MLS, days on market. Okay. So it's yes, less than 10 days on market, days in MLS. That's the parameter. So what I did was I said, okay, of all the properties that closed in the last 30 days, let's look at the ones that were on the market less than 10 days. The average days on market for those are 4. The median days is also 4. Okay, very significant. The 4 active listings in 80439 today, or as of Tuesday, were an average of 32 days on the market. The properties that closed in less that went under contract in less than 10 days were on the market for only 4 days. Very significant, only 4 days. The other thing that's very interesting about these is you can see from list to sell. This one sold for 108% of its list price. This one sold for 100. Here's 101, 102, 107, 105, 109, 100, 103, 103, 109, 108, 111, 102. So on average, they're selling for 105% of their value. So as we looked at the properties that were active, those properties have already experienced price reductions, except in the case of one. These properties went under the market. They sold and they went under contract in 4 days, and they sold at on average 105% of their list price. Very, very significant for these 14 houses, right? Let's take a look at another set of closings of the last 30 days. Okay, the difference is this list, and let me see if I can do this. Okay, these had 10 plus DIM, 10 plus days in market. Okay, so same 30-day period, same $700,000 to $900,000 price point. One set of homes closed in or went under contract in 10 days or less, and on average that was 4 days. One set of properties, this 6 here, went under contract 10 plus days. The average days on market for this segment was 28. Okay, so the houses that went under contract under 10 days averaged day 4. The houses that went under contract after 10 days averaged day 28. And then look, they closed at 97% of their value, 97% of the list price at time of contract. Now you will see here that some of them had price reductions prior to going under contract. Okay, but besides that point, they closed at 97% of list, as opposed to 105% of list for the properties that went under contract at 10 days or less. And so this is significant and important because it has to do with pricing it correctly, pricing it right. What you might say is the 14 properties were priced correctly, and they had a different experience on the market than the 6 properties that were priced incorrectly. Let's take a look at that, because I've got a little list here to kind of help put this into perspective for us. So first of all, there's only currently, to kind of recap this, there's currently only 4 active listings in 80439 between $700,000 and $900,000. Okay. The currently active listings average 32 days in MLS. Right, that's the average that they're there now. They, as of Monday night, Tuesday morning, they had not been absorbed into the market or had not gone under contract, and on average, they've been there 32 days. The correctly priced homes sold in 4 days. The incorrectly priced homes sold in 28 days. Big difference, big difference. The correctly priced homes averaged $360 a finished square foot. That was the average selling price. Now, in the foothills, finished square foot is a little bit kind of, it's a factor. It's not everything, because we don't, it doesn't tell us it's on 1 acre, 10 acres or whatever. So we don't really know how much of the value of the closed price is in the improvement and how much of the value is in the lot, but we can take a look on averages. So the correctly priced homes averaged $360 a finished square foot. The homes that sold in more than 10 days averaged $260, $100 less a finished square foot in their closing price. So you see there was a disparity between the value received on the plus 10 days, as opposed to the minus 10 days. The correctly priced homes sold at 105% of their list price. They went into the MLS usually on a Thursday, Friday, so forth. Showings began, Friday, Saturday, Sunday. They had a number of showings. typically there's more than one offer, like I said, we're not seeing the 10 and the 20 offers in some cases, but we are seeing a handful of offers. Those first couple of days on the market, they go under contract on average on day 4, and they close at 105% of the list. The incorrectly priced homes sold at 97% of list. The swing there is 8%. At $800,000, there's a $64,000 loss, right? There's a disparity of $64,000 between those houses that on average sold above it. So at $800,000, at play is $64,000. The difference between your experience on the market, if you're the 10-day and under, or if you're the 10-day and over. It's a tremendous difference. Your experience on the market is significantly different, and your opportunity is greatly diminished if you are not priced correctly, if you price incorrectly to the market. The good news is that 70% of the properties in 80439 were priced correctly. Okay, so 70%, 7 times out of 10, the sellers and the listing agent is getting it right and dialing in the price and the entry price point for a listing being entered into the market. On the other hand, 3 out of 10, 30% are incorrect, and they experience not only a longer experience of time on the market, on average about 4 weeks, they sell for about 8% less, and they sell for less in terms of value per square foot as well. Okay. So, one of the things I just wanted to bring this kind of information to you, because I feel like I want to help everyone that listens to these videos understand the market and the why. And so, one of the things that it's very, very important to us when we are helping a seller bring a property to the market is not only the presentation of the property, which is important, and I'll probably cover some of our strategies around how to present the property correctly to the market, right? You can't really fix location. It's where it is. Where it is where it's going to be when it goes to the market, but you can fix the presentation of the property to the market. And we do a lot of work around that, and I can give you some insight on that. But one of the keys, the most important thing right now in the market, and it's correct pricing. So many times, actually 30% of the time, I see new listings come to the market that are incorrectly priced, and it's a mistake. It's a mistake of the seller. It's a mistake of the listing agent, a combination of both, poor choice, whatever that is. And then those homes have a significantly different experience on the market than the ones who are priced accurately and correctly. Those properties that are priced correctly enjoy that bid up opportunity. They enjoy that greater value per square foot. And the other things that are kind of a little bit intangible is in those situations, the buyers that are under contract, those buyers that are in first position, typically had to sacrifice some other terms related to the due diligence, related to the inspection contingencies, related to appraisal contingencies. There's some other things that sweeten those offers in addition to the price. So if you want to have a successful experience in this market right now, you really, really, really need trusted advice and to be very wise and cautious, careful as you bring your property to the market in terms of price and the price entry point. At the McWilliams Group, we think that the real estate market is more complicated and difficult to navigate than it has ever been. Buyers and sellers risk losing wealth, missing opportunity, and exposing themselves to unforeseen hazards every day. We want to see buyers and sellers win and succeed in this market. Our services provide careful guidance for buyers and sellers so that they may safely and successfully accomplish their real estate goals. We think with trusted advice, you can be safe and confident buying and selling in real estate in this market, as chaotic and as crazy as it is. If you would like that trusted advice, if you would like to have a consultation with us, a lot of times we're talking to owners 1 year, 2 years, maybe even a little bit further ahead of the time that they're thinking of coming to the market, because we're talking to them about strategy. We're talking to them about pricing strategy. We're talking to them about appreciation and the value proposition that they have. The other thing that we do is we're consulting with presentation. We're consulting with, which modifications might bring you the most return on investment, which modifications might be a bit of a waste of your time, but more importantly, how to best present your property to the market in this particular time frame. But we can also speak into the future as far as what modifications, what renovations, what remodeling, what projects you might want to take on. But the main thing we want to do is we want to help you. We want to put our 20 plus years of experience to work for you. All the tools and resources that we have available. And so this is really important to me to bring this type of information to you. This is a bit longer than the videos that I've done previous to this. The point here was to go a little bit more in depth as far as the current market situation, studying July a little bit, letting you know about the tremendous, I don't know what you want to say, the tremendous craziness, especially in Evergreen in the month of July, with that 60% dollar volume increase, to show you the literal trend lines of showing activity in Metro Denver to kind of counteract that idea of 2 weeks ago, 3 weeks ago, that all of a sudden everything had slowed down and the skids had come to the market, and all of a sudden, oh my goodness, it's about to tank in terms of values and so forth. The bubble has burst, right? And then finally, I wanted to demonstrate just by raw data the difference in experience between correctly pricing your property and incorrectly pricing your property in this market. It's not true. It's a fallacy to believe that you can just say, hey, I want this much money for my house. And in this market, you know what? They're desperate and they're going to give me that much money, right? Though they being the buyers. Not true. Buyers are walking past homes every weekend that are overpriced and improperly presented. Every weekend, there are properties that come into the market on Monday, Tuesday, Thursday, Friday, Saturday, so forth. And then they're still there Monday, Tuesday, Wednesday, the next week. And then what we saw there are 4 homes right now that have been there for 4 weeks. And then we saw what the future is for those owners. Those 4 owners, the future looks like that second scenario where they're selling for about 97% on average of their list price. And they're not having the experience that the 14 homes had that priced correctly as they entered the market. That's all I have for today. I'd love to hear back from you. I'd love to hear if this is helpful information. I'd love to hear how I could make this presentation better, what other resources you might need. If there are topics or questions that you have that you'd like to either for me to address individually with you, if you'd like to set up a consultation either at your house, either or here at the office, or who knows, we could meet at Starbucks or a watering hole, whatever you want to do. But let's get together. Let's get your questions answered. If you have ideas for future video content, please let us know. You can reach out to the email that's in this, in the signature area of this email. You can call us today at 303-670-6393. Thank you so much. Again, I hope you found this information very, very helpful to your process. Please do not hesitate to reach out to any of us here at the McWilliams Group. We'd love to help you, and we'd love to give you the benefit of our experience and the knowledge we have about today's market. That's it for now. I'm going to try to figure out how to shut this thing down, and I'll talk to you guys later. Take care.